Thank you. My 10th lesson for investors from the financial crisis is emerging markets cannot be ignored. By emerging markets, I mean those developing countries that are gathering economic power, the likes of China, India and Brazil. They're an exciting group. They're much more volatile than the developed markets. But as they build strength, emerging markets will have a growing influence on developed markets such as the US and Western Europe. Now, some argue that the emerging markets will increasingly chart their own financial path rather than following the ups and downs of the developed markets. This idea is known as decoupling. This idea took a knock in the financial crisis. Like the developed markets, the emerging markets plunged. In fact, they did worse than the developed markets. But if we take a longer-term view, a different picture comes through. Compared with the US stock market, emerging market stocks perform much better over the last decade. They've tripled, while US stocks have barely broken even. Now, of course, there's no guarantee that this will be repeated, but investors can no longer afford to ignore emerging markets.